welcome back to Blocks Live TV. Today is Tuesday, March the 26th. We're now live with the latest in the crypto world. It's 10:30 a.m. in New York City, 2:30 p.m. in London, 11:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. Well, the total market capitalization has dropped by over $2 billion over the past 24 hours, and it currently stands at approximately $137.2 billion. The total market cap tested the $129 billion support level, but later corrected higher. The 24 traded volume has seen a slight increase. Let's take a look at some of the indicators. The cryptocurrency index CCI 30 has seen a minor dip to 2,485 points on the 15-minute chart, but this indicator remains bullish at 7.9% month-to-date and 11.5% year-to-date. The 30-day Bitcoin volatility index has seen a reduction from 2.3% yesterday to just below 2.2% level today. The 24-hour traded volume indicator has increased by about $3 billion to just over $33 billion. The Bitcoin dominance indicator has seen a minor reduction to 50.7% over the past 24 hours. The total top 5 digital assets are all bearish. Bitcoin failed to hold above the $4,000 level, and it dipped nearly 2% to $3,950. Ethereum has also dropped by 2% to $134.60. Ripple's XRP is holding just above the 30-cent level after a loss of 2%, but according to analysts, if it faces a further correction downwards. Litecoin has also seen a similar decrease in its price of 2%. The price of this virtual asset stands at just under 59 USD, and EOS is the least bearish with a decline of about 0.5%, and its price is currently at $3.65. The Coin 360 heat map is overall bearish with a very few scatters of green across the chart. Now, according to the token spread website, the XMO exchange shows the top spread for Bitcoin dollar of 0.19%. The XMO and BitMEX exchanges show the biggest intermarket spread of just over 2%. We'll now focus on some of the characteristics of Verge cryptocurrency. This is one of the digital assets that is built on the idea of privacy and is a fork of Bitcoin. The coin allows secure and anonymous transactions. It was initially launched as Dogecoin Dark in 2014 as a fun, anonymous digital currency. The coin was rebranded to Verge in 2016, and it trades with the ticker XVG. The asset has a multi-billion coin supply, which keeps the price of the asset low. Now, the price surged above the 20-cent mark during the previous bull market peak, but currently trades at less than 1 cent. We'll now review the performance of the various cryptocurrency asset classes. We use data from the Messari website, which groups cryptocurrencies into 5 major categories. Starting off, the infrastructure group has gone south by 1.6%, with most of its top currencies in the red. A top loser in this group is the Ontology virtual asset, with losses of close to 9%. IOTA is also down by 3.3%. The media and entertainment category is also on a decline of about 1.8%. It shows a mix of green and red amongst its top virtual assets. The Funfair and Poet tokens are north by about 4%. Steam is a top decliner here with a loss of about 8%. The financial sector is the top performer among the 5 categories, with a northbound move of nearly 6.5%. Chainlink shows a gain of 6.2%. One of the top decliners here is BitShares token with a loss of almost 12%. The currency category has gone south by just over 3%. All of its top currencies are in the red, including Bitcoin Cash by 4.4%, Stellar Lumens by 3.5%, and Tron by about 3.3%. Lastly, the services section is almost unchanged with a slight decline of 0.2%. Huobi token is among those in the green with a gain of 1.1%. A top loser here is Project Pi with a decline of nearly 9%. This is where the 5 major cryptocurrency categories stand so far on this Tuesday. We'll now focus on the most significant moves among the top 100 cryptocurrencies to identify the top gainers and the biggest decliners. 3 of the top 5 gainers are showing double-digit increases over the past 24 hours. Maxine Coin is topping this list for the second day in a row. Today it shows a 24-hour increase of about 21%, with frequent ups and downs. The price of this token is just under 10 cents. The token has been bullish over the past week, and on March the 19th, its price was about 4 cents. The only relevant fundamental found here was from Bitforex listing on the MXN token on Friday. Wacky Chain has moved north by almost 12.5% in the past 24 hours, and its price stands at around the 25-cent mark. The coin has been slowly climbing steadily over the past 7 days. It announced the WICC/USDT listing on CoinTiger today. Now the repo token has moved north by approximately 11.5% on a very low 24-hour traded volume of just below 47,000 USD. This virtual asset has seen quite a bit of ups and downs over the past week, although the price remains essentially unchanged at about 59 cents. Chainlink shows a more modest move upwards of just over 4%, with some ups and downs. After the past week of fluctuations, the price of the coin is where it was 7 days ago, at around 47 cents. Digitex Futures is also riding a very slight bullish momentum that has seen its price rise by just over 3.5% to approximately 8%. But over the past week, its price has moved up by less than a cent. The top 5 losers over the past 24 hours have all gone south by at least 8.5%. Digibyte shows a loss of nearly 16% on a 24-hour traded volume of just over $1.2 million. BitShares was on one of our top 5 performers yesterday, with a move north of more than 20%. But over the past 24 hours, it has gone south by almost 12%, and its price stands just over the 58-cent level. Polymath's price has also gone south by 11.5%, and its price stands at almost 12 cents. Cubitica has seen a downward move of nearly 9% on traded volume of just over 73,000 US dollars. The price stands at just over 16 USD. Project Pi's price has dropped by about 8% to just over 5 cents, although after a week of minor ups and downs, its price remains basically the same. Well, these were the top 24-hour moves during the European morning trading session on this Tuesday. We're now joined Edward Isker, an expert crypto analyst at Bitcoin Gold, and Jason Fernandez, CCO at AE Token. Edward, Jason, thank you so much for joining us on the line today.
Hi, Jessica. Hi, Jason.
Thanks.
Great to have you both back. So, Edward, we'll start with you today because we have seen that Facebook has announced its crypto wallet will be ready for beta testing next month. Now, you would think that this would have a more positive impact on the crypto market. Are we expecting this impact to kick in the next few days or until the beta testing is actually launched? What do you think?
I think it's going to be a gradual impact. Not only do they have a lot of testing and experimentation to do before they've identified how they're going to integrate it with Facebook, we also need to see some adoption happen. We don't know that Facebook users will want to use a Facebook branded and Facebook controlled crypto wallet. Personally, I think they are going to have a huge issue learning to deal with security. Let's face it, anyone who's been on Facebook for a while has seen messages pop up from time to time saying, hey, if you got messages from me in the past couple days, it wasn't me, my account was hacked. Well, when that happens as frequently as it does, people will have a high threshold for security before they begin to trust Facebook with their cryptocurrencies. But if they can get that solved, if they can implement some sort of security, or if people learn to use their Facebook crypto wallets just for small, effectively change amounts, very, very small amounts of money, it could well take off. But regardless of their implementation and success, it's definitely bullish. It's definitely bullish that general consumer mainstream applications see the need, see the benefit of integrating crypto into their systems.
Yeah, absolutely right. And Jason, what do you think? Are we expecting this to have a positive impact? As Edward has said, this is bullish news. Are you expecting this to have a near-term impact?
Yeah, it definitely is bullish news. I mean, it's certainly news that can help boost the crypto industry. But it's important to realize that Facebook hasn't quite succeeded at everything that they've ever done. I mean, the last time they launched a virtual currency, which they did, was a really horrible failure. It was something known as Facebook Credits, which they launched in 2011, but they ended up phasing it out in September 2013. They've also failed at launching a news app, Facebook Notify. They failed at Facebook Home. There was also Facebook Deals, which was supposed to be a competitor to Groupon that ended up failing spectacularly. So it would really be great to see this actually be implemented and actually see how people react to it before we start jumping to conclusions about how it's going to affect the market.
And that's an interesting take on that, actually, it's very rare that you hear about the failures here, and this might actually not take off. Another interesting social media aspect is actually Twitter. So we've got Jack Dorsey and his firm Twitter. Of course, they also don't want to fall behind. His firm has announced the hiring of a full new-time crypto team. So Jason, we'll start with you on this one. Is this good news for crypto as well?
Yeah, I definitely think it is good news. It's important to mention, though, Jack Dorsey is also in charge of Square, and this is essentially a Square initiative, which is a payments company. But it's not just so. Essentially, what he said is he's going to hire a team of essentially 4 or 5 people to work on crypto related topics, basically. But it's not quite just the fact that he's hired 4 people. Of course, Jack Dorsey has hired like hundreds and hundreds of employees. The thing that's interesting is that these 4 employees are going to be reporting directly to him. And so that implies that he sees the importance of crypto and understands that the technology is transformational. And so this will actually be Square's first open source initiative that is independent of their business objective. So the idea behind this is about improving the crypto space for users in general, and that includes the user interface and also what's going on under the hood. And this doesn't really have anything specific to do with Square's commercial interest. It's more essentially an attempt at the open source community, at basically helping the open source community. They said that Square's taken a lot from the open source community, and essentially they feel that now's a good time for them to give back. And this is sort of an altruistic thing. And certainly if other CEOs of massive companies joined in and did something similar, that could make a huge difference. I mean, especially in a retail market where so much demand is driven by hype. When you have somebody like Jack Dorsey, who's in charge of Twitter, which is basically the biggest hype machine on the planet, basically pro crypto and bullish on crypto, I think it really gives people a chance just to second guess themselves, especially the ones that were anti crypto to begin with. That maybe there might be something to this.
And it's interesting as well to see that the fear of missing out has kind of extended outside to just traders, but also to organizations as well. Edward, what's your take on this? And Jack Dorsey potentially looking to enter the crypto space?
I agree with everything that Jason just said. I would add that when we look at some historical failures to introduce their own coins like Facebook's, the popular thing in the past couple of months, last 2 years, has been introducing a new token. Every exchange, every crypto exchange that stands up wants to create their own token. Every new service wants to have its own token. I think that Facebook and Twitter might be in trouble if they try to create their own tokens, because they're creating closed environments. It's more like a gift card within Facebook than an actual cryptocurrency. It's not a currency unless you could use it outside. But I find it encouraging that Twitter's getting involved, because as Jason mentioned, Jack is a huge Bitcoin advocate specifically. So I'd like to think that he understands the merit and the value of having an independent, strong, hard currency, as opposed to creating something internally that a company can own and inflate. When it's not a company-owned currency, I think it has a lot more possibility. One of the reasons I think this is so bullish, and it's interesting to note the relationship between Twitter and Square, is that when commercial retail consumer applications like Facebook and Twitter start allowing people to easily use cryptocurrencies, that then makes it possible for more retailers to accept cryptocurrencies. Right now there's plenty of retailers that are interested in accepting crypto, but they don't see a huge volume of people demanding to purchase with crypto, so they're not going to add it until it's easy to do. Well, when there's more companies like Square making it easy to get involved with crypto as well, or a Twitter-related initiative making it easy to use crypto, and people are advertising their retail products on Twitter, on Facebook, and those users can easily use crypto, suddenly you drive a lot more purchase volume to the retailers, which leads retailers to start accepting crypto, which leads to a sort of wave of a spiral of adoption. I think it will be definitely very bullish long term, but we don't know whether that long term is going to be years in the making or whether we'll start seeing the effects in just a few months.
And only time will tell. You're absolutely right. Now, on the topic of adoption, I'd like to touch on traded volume just for a second. And Edward, we'll start with you on this because we touched on this briefly in a Crypto Now show a few days ago. Bitwise has actually released a report saying that about 95% of Bitcoin traded volume is fake. They say, for example, that CoinMarketCap reports approximately $6 billion in daily Bitcoin trading. The real figure is around $273 million. Is this possible? Is this a surprise to you? What's your take?
I can't say it's a surprise because everybody who's been in the crypto industry for a while knows that there is a lot of artificial volume out there. In fact, 2 weeks ago today, when I was on this show, we were dealing with the fact that a new exchange had gotten a market listed on CoinMarketCap, and that market was suddenly showing more volume in Bitcoin Gold than the entire rest of the world combined by a factor of several times. So, I mean, that's absurd volume. And what was actually going on was that they had no fees and they had a large amount of either bot trading or outright wash trading. So that was obviously fake. But the crypto industry does realize this happens and we do react to it. So we contacted CoinMarketCap and CoinMarketCap squelched their volume numbers out of their averages. And that's something CoinMarketCap has been doing all along, and a lot of the other aggregators do that too. Most of the aggregators didn't even see this surge in volume because the exchange that did this made sure to get listed on the leading aggregator right away. You know, they do this to raise their profile. But my concern is not just that there is some fake liquidity. You know, we can identify the obviously fake liquidity. Fake volume. My concern is the question of what is the real volume out there. And I'm not convinced that the Bitwise report is all that accurate about it. Bitwise, well, let's face it, they have a vested interest here because in January, Bitwise applied to the SEC for an ETF, and maybe we'll get to talk about that later. But so Bitwise made a report that very specifically says most of the players are being completely phony, and they wrote off almost everything they're doing. I have concerns about their methodology. You know, they sort of did a couple of exchanges that they thought were pristine, that they thought were pure, and said these are the normal behaviors for an exchange, and anyone generating more than that relative to the number of views we see is obviously doing fake. Well, that's not entirely true. Other exchanges get a lot of volume different ways. Some of them are legitimate, but some of them are not legitimate, and it's almost impossible to discriminate them from the outside. We really need information from the inside and regulation to control what they're doing. But, you know, what's the difference between an exchange that offers a promotion that brings in lots of people to trade versus an exchange that does wash trading? Well, if the exchange is internally doing wash trading, that's all fraud. But if they do a promotion, well, that is legitimate volume, whether or not you like it. You know, if Macy's holds a sale and their sales double, we don't say, well, those are fake sales. That doesn't actually count as money generated. Well, sure it does. It's real sales. It's just part of a promotion. Exchanges outside of the traditional exchanges do promotions all the time. They do trading competitions. They do random airdrops to traders who have certain kinds of tokens in their accounts. These sorts of things are done to create a name for an exchange, to generate volume. They're not traditional, but they're also not outright fraud. They're not total fake volume. They're generating real volume in unusual ways. And we need time for that to settle out, to learn what that really means for the overall liquidity of the markets.
Absolutely, and understanding what's going on as well. You certainly were really vocal, especially on the BlockSide TV platform, to the Bitcoin Gold community as a representative when this was going on a few weeks ago, and we really do thank you for that. Jason, I would love to get your insights as well as a representative of A Token. What's your thoughts on Bitcoin daily traded volume and the figures actually being out of sync, actually at $273 million? Is it possible in your eyes as well?
Yeah, I mean, the possibility that there was trading manipulation and that a lot of trade volume was fake has been an open secret for years. So everybody in crypto knows that, you know, some degree of the volume wasn't legitimate. But when you look at the relationship between market cap and 24-hour volume, it makes you wonder how an asset like Bitcoin can turn over more than 10% of its market cap like on a daily basis. But remember, I mean, Bitwise is working on an approval for an ETF. And the reason they are essentially publishing this is because it amounts to effectively positive news. That's if you trim the fat, the real volume actually looks more normal, more efficient. The market looks more mature. There's less arbitrage opportunities. And the prices between a lot of the top exchanges are very efficient. I mean, there's essentially the same price or close to it. So that shows us that most of the real Bitcoin volume takes place in areas either in the U.S. or other highly regulated jurisdictions, indicating the actual Bitcoin market is a lot more mature than most would think.
And I'd love to get your insights as well, Jason. What kind of impact are you expecting this to have on, for example, the US SEC decision on Bitcoin ETFs and the application that is currently mulling? Are you expecting it to have an impact in any way?
Yeah, I mean, it could have a positive impact, right? Because basically what this implies is, we'll see, Bitwise is one of the U.S. is, basically, according to the presentation by Bitwise and according to their statistics, the U.S. is essentially the largest Bitcoin exchange market by daily volume. And given most U.S. exchanges like Gemini and Coinbase are basically strictly regulated and compliant with existing laws, one could essentially say that the overseas market has a less impact on the price of Bitcoin than one would expect. And therefore, it's actually good news in terms of it means that the industry is a lot more regulated than people would think. And strictly regulated Bitcoin futures market in the U.S., for example, are responsible for a relatively large portion of the global Bitcoin volume, so something like 35%, which actually means that a lot of what we were seeing, when you actually start trimming the fat, a lot of the numbers start syncing up, and it actually looks like a more mature market. The SEC doesn't really care about the amount of volume; they just care that there's nothing, shady going on, and that's basically what this sort of says. Essentially, that most of the trades are legitimate, at least in the U.S.
And Edward, what do you think? Because you are based in the States, so I'd love to get your insight on this as well. Are we in need of a crypto cleanup, as it were, before we see Bitcoin ETFs? Is it going to be something that is actually impacting the US SEC?
You're almost asking, is this the chicken or the egg? And I think that they both have to evolve at the same time. I absolutely agree with what Jason said regarding the legitimacy of prices and the fact that you can see that the prices align more reliably. So realistic trade volumes, realistic price spreads. But at the same time, I'd note that a lot of what they're doing with Bitwise's report is establishing that, yes, there's some fake volume out there, but we know how to identify it. Our index of prices is the one that you could count on. That's part of their message to the SEC. Don't worry about us having a fair and true price for our ETF. We're going to base it off our own index, and our index is accurate. Look, we can identify all this false stuff. I'm not sure that's going to work all that well on the SEC, because the SEC tends not to want to allow an ETF where the entity running the ETF is also running the index on which the ETF price is based, unless it's a heavily regulated, well-controlled, well-investigated mechanism. And they're not one of the most traditional players in that space. The message I do hope that the SEC takes from this is the following. Let's not forget, the SEC's fundamental mission is to protect the consumer. These kinds of reports are making clear that the consumer has a problem differentiating what is a legitimate price, what is legitimate volume, and what is not. And if the consumer does have a problem, the consumer's out there buying and selling crypto, and the consumer can't tell what's legit, we need to have regulated exchanges that people can look to say, yes, this is a trusted price. I know this exchange in Southeast Asia currently has a price 10% higher or 10% lower, but that's some sort of local friction, or that's some sort of local promotion. The real global price is more like this. We're not going to have that. We're not going to have that reliable place until either there's tremendous maturity and a lot of these frauds have been squelched by market demands, which is unlikely to happen. There'll be another fraud every minute. Or we start having some reputable, reliable, regulated exchanges, not just in the U.S., but in other countries as well, Once we have these reliable standards and people can see that there's a believable price, then the consumer can have some degree of safety. And that's the SEC's mission, to provide for consumer safety. So I can't help but think that if they get the right message, if they see the big picture, this is going to increase the odds that they approve an ETF once they see an ETF that they believe is going to be independent enough.
Great. And now, Jason, just very quickly, because we are running out of time. So experts say that historically, Bitcoin has experienced significant price swings after long periods of sideways trading. Let's end this looking at price. So Jason, do you agree? Does this mean that we'll see the price of BTC increase shortly, potentially?
So it's not quite trading sideways anymore. It's actually gone down. So that could be a reaction to the fake volume discussion that's going on, or it could be due to other factors. Now we're at something like 39.50, and it goes back to sort of the situation about whether we will cross the 4K mark and how high can we go after that. I think it's encouraging that the delta has gotten smaller and we're only at 39.50 and not lower. And I think that's a good sign overall, because that means that it'll be really easy to pick back up past 4,000, and I think probably significantly past 4,000. I think the next bullish uptake could take us to like 4,200 or 4,300, perhaps even higher than that. So it's just sort of back to a situation where we're waiting and watching. But I think overall, I think the indicators still look good, and I think that we should maybe not trade sideways, but maybe actually have a pop upwards soon.
And we'll wait and watch every day this same time. Thank you so much, Jason and Edward, for joining us on the line. It's always a pleasure to have your insights. Thanks very much for your time today.
Thanks all.
Thanks.
Thank you. Now, before we sign off, I do have a last-minute update from our editorial staff regarding the crypto market. The total market cap continues to slide downwards, losing almost $1 billion over the past few hours. It stands at just under 136.5 billion USD, but the 24-hour traded volume has corrected upwards to just over $35 billion, while the Bitcoin dominance is back to 50.9%. Bitcoin continues to struggle with the $4,000 support level, while only 10 of the top 100 cryptocurrencies are currently in the green. This wraps up Tuesday's Crypto Now live show. We thank Edward Iskra and Jason Fernandez for their expert analysis, and we thank you, the audience, for joining us, and invite you all to accompany us every weekday at this same time.